I just did something absolutely insane. I sold my entire house, cashed out every single penny I have, and I'm investing everything into crypto. This already comes after me taking my entire life savings, every dime I had, and investing it into crypto back in late 2022. The only asset I hadn't liquidated and sold and invested into the crypto markets up until this point has been my house. But something shifted recently, and now I'm ready to go all in on the crypto markets. And as of last week, I officially sold my house and the cash is in the bank. And I'm putting every single dime of it into crypto, meaning literally my entire net worth, including the equity in my house, because I no longer have a house, is going to be fully invested in the crypto markets. And I keep laughing because I know some of you guys think I'm absolutely off my rocker and I've lost my mind. But let me explain to you why I don't believe that. In this video, I'll explain exactly why I'm doing this, what I personally believe is coming next, my overall strategy, and exactly what altcoins I ended up buying. Okay, first off, this isn't clickbait. This isn't a joke. I really do have my entire net worth invested in the crypto markets. I really did sell my house. And although I haven't quite gotten all of that money into the markets yet, I have taken a chunk of that money, already invested it into the markets, and the rest of it will get fully invested into the crypto markets. And outside of that, I don't have like a sweet secret nest egg or anything like that. I literally have enough money in my bank account to pay my bills, to pay my rent, and to pay my car payment, and that's it. This means either I'm right about this, and I'm right about the projects I'm putting money into, or I lose everything, okay? I don't do like sponsored content on my channel. I don't make any money from sponsorships. Up until a few months ago from my YouTube AdSense, I made around $700 a month. I do have my membership group, the Obsidian Council, but that income is also predicated on me being right. If I'm wrong and just absolutely suck at this, well, nobody's gonna pay for that. AKA, if I'm wrong about this, I quite literally lose everything. I have no backup plan. I have nothing. I have no backup plan. I am all in on this. So why am I doing this now? I'm doing this now because I believe not only is this crypto cycle not over, but it hasn't even really started yet. As you guys know, I put in a ridiculous amount of work trying to dissect the 4-year cycle, trying to dissect the markets and the forces behind the markets that actually cause crypto prices to go up. Specifically, I've tried to track down and trace the origin point of what causes the insane 4-year cycle pattern that we've seen play out in 2013, 2017, and 2021. All 3 of those years were epic, absolutely unhinged bull run years. And they happened exactly, very specifically, 4 years apart. I've wanted to know why. Why did those things happen 4 years apart? And even kind of broadly beyond that, what are the catalysts that cause bull markets like that, or that cause bull markets like the dot-com bubble? Because if I could figure that out, I could identify when the next crypto bull run would happen, or when the next dot-com level investment, everything goes up, everything bubble event happens. And so I put in literally hundreds, if not thousands of hours into understanding these things, or trying to understand these things and tracing everything back to its source. And I believe as of recently, I have finally traced everything back to its origin point, that I've correctly identified the key macro drivers that ultimately cause every single crypto bull run we've ever seen in the past. And I call those key macro drivers the 11 rings of power. And these are essentially the 11 catalyst points or origin points that ultimately tip the dominoes over to cause an epic crypto bull run. They're the first things to fall in a long chain of events, in a long chain of things that ultimately cascade into a crazy bull run mania. And you're gonna have to bear with me on some of the names here, because I really wanted to fit this all into a Lord of the Rings analogy. But the 11 rings of power are basically central banker or regulator governmental levers that they pull to try to guide the global economy, to try to guide the global financial markets, or in some terms, they're like their own local financial markets. And these 11 rings of power are basically different forms of money creation. They're different ways to inject more liquidity into the markets, pushing asset prices higher. And I'm not gonna go through all of them because that would take literally forever, but there's things like the Fed cutting rates, the money printer, policy stances like promising not to hike rates, cutting different reserve rules or loosening capital restrictions, allowing mercy when loans go bad and allowing banks still to keep lending, backstopping banks like what we saw in 2023, the government spending a ton of money and injecting liquidity into the markets, the Treasury doing a TGA drawdown, again, injecting more and more liquidity into the markets, and a bunch of other stuff. And although this stuff might sound boring and it might sound not interesting, all of these, again, you can just very simply think of as ways to generate or inject more liquidity into the wider global financial system. They're basically levers for policymakers to pull to just like open the floodgates of the dam and let that liquidity flow into the markets. And every single bull market we've ever had has come from regulators and policymakers pulling that lever, activating those rings of power, and letting that liquidity flood into the markets. For example, I have this chart here that shows what past bull markets look like. Red means that ring is off. Orange means that ring is partially on. Yellow means that ring is on, but it's really weak. Green means that ring's on. Purple means that ring is on really strong. And white means that ring is on crazy strong. And black basically means that like that ring is held in the heart of Mordor and it's not looking very good. You can see that in 2013, the Fed had rates at basically 0%. The money printer, or QE, was on strong. They had a weak no hike pledge. A lot of the other things were off, but the government was spending and there was some drawdown in the TGA. Each one of these dots is a source of liquidity pouring into the markets, and that liquidity ultimately finds its way into crypto and pushes asset prices up. In 2017, the Fed was not dropping rates. They were actually hiking rates, but the rates were really low still. You can see the money printer was on weak, and that's not because of the US. The US was not doing QE, but this is looking at global. So this isn't just looking at US centric, but it's looking at global. So there was a little bit of money printing going on, and you had some partial spending by the government. Overall, 2017 was actually a pretty weak year. 2017 actually heavily benefited from a lot of the liquidity created in 2016. So in 2016, the money printer was on legendary status. There was a lot of money being printed, and that liquidity bled into 2017, and along with some of these other factors, allowed crypto to have just an absolutely unhinged bull market. Also consider back in 2017, crypto was a lot smaller. And you can see in 2021, the amount of liquidity pouring into the market was absolutely unhinged. Every single ring was activated, and some of them were just activated at full power over here, pumping ginormous amounts of liquidity into the wider global economy. And you're probably thinking to yourself, Jesse, you were telling us why you invested your life savings and sold your house to put it into crypto. Why are you talking about like weird rings of power and liquidity and all this kind of stuff? Well, remember, these things help us understand where we're going, where the market is going. So I'm trying to paint that picture for you so you can see what I'm seeing and why I'm so bullish. Okay, so anyways, really clear to see that every single crypto bull market, we've seen, some of these, or in some cases, all of these 11 rings of power activated, flooding cheap credit and a ton of liquidity into the markets, causing these bull run manias. Now, here's what the 11 rings of power look like today. You can see it looks a lot different than what we saw in 2013, 2017, and 2021. You do have some central banks dropping rates, but the money printer is definitely not going. We have the opposite, QT, happening right now, which just think of that as like sucking liquidity out of the market. We do have one little green light here in a sea of red, but this is just leftover from 2020. This has been on since 2020, and they just kind of have left it on since then. And you're probably thinking to yourself, wait, why are you bullish again? Why are you throwing your life savings into crypto if the picture is looking that bleak? Well, I haven't mentioned it up until this point, but there's actually a secret 12th ring. And this 12th ring is the single force behind all 11 rings that causes those policymakers to flip those switches in the first place. It is the one ring to rule them all. It is the thing that causes those little black dots and little red dots to flip into green, purple, and white. And that 12th ring is called pain. That's right, the puppeteer behind the scenes, the one that controls all 11 rings, the true man behind the curtain is economic pain. When you have moments like the 2008 financial crisis or 2020 after COVID, when the market is in serious dire straits, when you have all this economic pain, everything is breaking, everyone's losing their minds, the stock market is collapsing, the bond market is collapsing, whatever it is, when you have abundant amounts of economic pain, the Fed, the central bankers, the regulators will run as fast as they can to those 11 rings to activate them, to pull the lever, to cause that pain to go away. We just saw this happen during COVID when the Fed cut rates to zero. They started doing QE. They did all these exemptions and all these loan programs and all these policies to pump as much liquidity as they physically possibly could to stop the pain. As absurd and as insane as it sounds, economic pain is the true source of all the greatest bull runs in history. Although 2020 was rife with a ton of economic pain, 2021 was one of the greatest bull markets the world has ever seen. And that's because the one ring, pain, is the one truly in charge of the other 11 rings and what causes those other 11 rings to flip bullish. And right now, The world is going through some pain. Tariffs are causing all sorts of chaos globally in the economy. And we're just now starting to see the early signs of the slowdown that this is causing. Take a look at the Richmond Expected Manufacturing Employment Essay Survey, which is the longest name for a survey, I think, in the history of survey names. This just recently dropped and came out with a staggering -18. To give you context, that is the largest drop ever for this survey. Larger than the drop in 2020, larger than the drop in 2008. This is the single largest drop ever in this survey. 2008 was a drop of 14, 2020 was a drop of 12, and just now, this is a drop of 18. Basically, this is a sign that they're massively cutting jobs in the manufacturing sector per this survey. And this is a piece of core survey data that goes to the Fed. Meaning the Fed is going to see this exact survey and weighs it pretty heavily when considering policy and what they're going to do. And remember, a lot of this data lags, meaning a lot of the consequences from what we've just gone through with the tariffs, a lot of that data has not yet hit in front of the Fed. They have not seen that data directly. They always are looking at backdated, lagged data for the most part. And I actually made this economic pain one-ring dashboard that kind of gives you an overview of where we're sitting today. You can see right now, labor is sitting in the noticeable but not horrible. Manufacturing, per that report, is sitting in the crisis zone. And the rest is kind of just like mid data. And I have a little composite pain index here. In past cycles, 60 or more has triggered the first policy ring in past cycles. Right now, we're at 53, but we're getting close to 60. And as I said, a lot of this data lags. And I believe this data is going to come in worse over the next month because we did have some fallout from tariffs and everything happening that is causing some layoffs and different things to start to show up in that data. I swear I'm bringing this all together. So it starts with economic pain. That is the one ring. That is the source of everything. Economic pain bleeds into the 11 rings of power, the 11 policy sources that ultimately create a ton of liquidity that push into the credit cycle and a bunch of other things. Now, I've talked about the ISM in past videos. Every single crypto bull market ever in history has happened after the ISM has gone well over 50, approaching 60. You can see the 2013 bull market right here went up to 56. 2017 went up to 60, and the 2021 went all the way up to 64. So far this cycle, we've only taken a slight breath of air above 50 before coming back down, meaning there's near zero chance that we've topped this cycle. We haven't even started this cycle. If you need more proof that we have not yet topped this cycle, check this out. The green part you're seeing here is M2 year-over-year growth. Think of that as the speed that M2 is growing year-over-year. A lot of people like to use this blue chart of like M2 just going up, but the reality is M2 is just mostly always going up. So it's not really a lot of signal there. But this green chart is a ton of signal. In fact, you might notice right away the 2013 bull market, the 2017 bull market, and the 2021 bull market. That's because in all three of these years, there was a ton of liquidity injected into the global economy that caused these insane bull markets, exactly as I just explained. And it's really clear to see here that we have not yet had a massive liquidity injection into the market, which is why we haven't seen retail come back to crypto and why we haven't seen a crazy bull run mania. But it's also why we haven't topped yet. Instead of a liquidity-driven like frenzy causing the crypto markets to go up, a lot of the market action that's pushed Bitcoin and a lot of these things higher has just been like normal adoption. We have all these ETFs now. We have TradFi fully on board. There's a lot of people buying crypto now. And that's what's driving a lot of this push up. It's not a mania-infused liquidity rally. Bringing it all together, we just have not had the same conditions that we've had in past bull markets that are the telltale signs of a mania or a frenzy or an unhealthy market state that causes the crypto markets to ultimately crash. Instead, a lot of the growth, a lot of the buying, a lot of the adoption has been driven by healthy and sustainable sources that are completely different than what we saw in 2013, 2017, and 2021. I believe the liquidity-fused mania is still ahead and we're still building steam. The core ingredient that we're waiting on, of course, is economic pain. We're waiting for a lot of this pain to hit the data. And when that pain hits the data, that will cause the policymakers, et cetera, to pull the right levers, to activate the rings of power that ultimately cause this liquidity infusion into the wider global economy, pushing asset prices higher. And this is why I feel really comfortable investing right now, because I believe the best is still ahead. And the current foundation where we're sitting is actually pretty solid. It's actually pretty reasonable where we're at and why we're here. And I'm not really worried right now about a massive crash down. Now, I'll say that with a little asterisk mark. Given how much of the tariff narrative is driving the markets right now, we really are just one hyper negative headline or one hyper positive headline away from the markets skyrocketing or dumping again. Meaning I do still believe it's possible to see some short-term pain. And I'm definitely not saying that's not the case. If Trump came out and said something absolutely insane about tariffs, etc., it could cause the markets to dip a lot lower, or something could end up breaking in the markets because of all this pressure, and that could send the markets a lot lower. But as I said earlier, that's actually a bullish thing. Economic pain is the one ring. It is the one ring to rule them all. If you have a big bout of economic pain because of this, something breaking, etc., that is going to cause policymakers, etc., to start activating those rings, which is going to ultimately lead to a liquidity-infused rally later down the line. But given that I don't actually know, in the short term how that might play out, I am doing a DCA strategy with the money I sold my house from. So I'm not putting it all into the market in one big chunk. I just did my first single buy into the market, and I have plenty more capital to do further buys in the coming weeks or months. And I'll tell you exactly what I bought with this first batch of money in just a second. And I'm going to make future update videos when I make some of my other buys into the market, talking about what I bought and why I bought it as well. And of course, in the Obsidian Council, I always do buy updates exactly when I buy something. So when I made these buys, right after I bought them, I posted in the Obsidian Council what I bought, why I bought it, etc. If that's something you're interested in, make sure to join the Obsidian Council waitlist in the description of this video so you can be notified next time it opens back up. With this first set of buys, I bought 3 tokens, and I'm going to go through them really quick because this video has already been pretty long. The first token I decided to buy with some of my house money was Polygon's POL token. And I know I'm going to get made fun of endlessly for this because so far POL has been one of the worst performing trades of the last 2 years. There's no other way to say it. It has been an absolute dud of a trade, and it's just not done well. It has been a dog. It has been a dog of the altcoins. Like, some of these alts have been doing great for the last 2 years. Polygon has not been one of them. So I really had to think hard on if this was a choice I really wanted to make. But here's why I ultimately did decide to still invest into POL, and why I ultimately still believe it's going to do well when we see an alt season. The fact of the matter is, there just isn't a lot of projects that are actually innovating and building in the space. There's a lot that say they are, and most people just don't understand what they're talking about and believe it. There's a lot that pretend they are, but they're really doing nothing. And then there's a lot that don't pretend. They're like meme coins or vaporware, and they don't pretend they're anything otherwise. Polygon doesn't fit into any of those categories. Polygon spent close to $1 billion acquiring the best ZK talent on the face of the planet, because they believe ZK was the future. And that now is coming true. ZK is taking over everywhere in crypto. And although it may not be fully market ready yet, like we haven't seen quite the results in the wider crypto market yet, everyone agrees that this is where the crypto market is headed. There are just too many benefits and insane things you can do with ZK that you just can't do with cryptography today. And Polygon is getting really close to fully rolling out their AG layer. The AG layer you can think of really simply as like the internet of crypto. It promises to connect all these chains together really, really simply, so you can move between them as if they're all one seamless chain. And although a lot of projects promise that, like Optimism has their like super chain that you can move between, Optimism super chain is limited to chains that are running the OP stack. You gotta be part of the OP stack, where the AG layer isn't like that. It could connect to Optimism superchain, but it could also connect to Solana. It could also connect to Cardano, like, whatever you want. It's actually really, really cool. It doesn't mean they're going to win. It doesn't mean the market's going to adopt this tech. I understand that. But when it came to like allocating this money, I'm like, man, I sold my house. I don't want to put this in something stupid that's going to, collapse in price. And I just know Polygon's going to be around. They're not just going to disappear overnight. They're not going to, evaporate, because they're a real team building real products. And as a secondary consideration, Polygon is also teasing 3 airdrops that are coming for Polygon stakers. So if you're staking your POL, you have 3 potential airdrops coming up. I don't expect them to be insane. I don't expect them to be a ridiculous amount of money, but I expect them to be like a bonus for, I'm going to be holding POL, I'm going to be staking it, and then I have the potential for these 3. I think there's a total of 4, but there's only details on 3. So 3, potentially 4 airdrops, and down the line, potentially way more even than that. We'll see how this plays out. I bought POL at 23 cents, and I'm hoping to sell it, obviously, at an amount higher than that. The second thing that I ended up buying with my first DCA with my house money was Cow token. If you've ever used Cow protocol or used Cow swap, you know it's like the single best swapping experience in all of crypto. And Cow swap has been absolutely dominating in terms of growth and volume. They're just seeing a lot of usage and adoption, a lot of fees, a lot of revenue. And again, they're just one of those ones that isn't going to go away overnight. And I bought Cow at 29 cents. The final token that I ended up buying with my house money was RSC, or Research Coin. Every single time crypto flips even slightly bullish, we see Research Coin skyrocket. It's just one of those tokens that does really, really well in a bullish environment. And it has a timeless and really sticky narrative in that Brian Armstrong is the co-founder. And it doesn't matter, what bullish season you're in. That's just a sticky narrative that's going to get repeated and repeated and repeated. And because Brian Armstrong is the co-founder, every single time crypto gets bullish, you're going to see influencers talking about it. You're going to see it getting posted. You're going to see people sharing it with their friends because they're going to speculate. It's going to get listed on Coinbase. it's going to get special treatment. Like all the, whatever. None of those things need to come true. People are just going to be bullish inherently because Brian Armstrong is the co-founder. And on top of that, it helps that ResearchCoin is in the DeSci space. So it's like an actual project doing cool stuff. It's with science and research and funding. They're incorporating AI into peer review research. It just recently jumped into scientific funding, which is a multi-trillion-dollar market. Despite all this, ResearchCoin is just a really tiny token. It's really small, despite how powerful of a narrative it has around it. And I ended up buying ResearchCoin at around 25 cents. As I've said, there's a lot more bias to come. I still have a lot more capital to invest into the markets, but I'm going to DCA in because still on the short term, there's too much risk of just one headline, one comment away from the markets dumping. And for me, that's just too much to throw everything in at once. So I'm going to spread that risk out over weeks as I DCA into the market. As always, none of this is investment advice. You need to do your own research and act like a grown adult. If this video is helpful, make sure to hit that like button. And if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.